Hello everyone, and today I'll show you how basically I took a trade on 1st October, which is Tuesday, and I traded in London session because I just like to trade in London and New York because those two shows a lot of volatility. All right, so there is no daily bias. Okay, there is no daily bias. So like we're just using our lower time frames to manage our trades. Okay, so we're gonna go to 1 hour. We're gonna extend this fair value gap, which was holding the price pretty well, and like it's tapping, like it tapped the consequent endorsement here. Then there is the institution order flow entry drill twice, thrice, 4 times here, and then we can see there is a huge wick down there, which is also our previous day low, which is made on Monday, and so today is Tuesday. So yeah, that's our previous day low. The price is near here, so our draw on liquidity is the previous day low. We're expecting there will be a sweep of liquidity, and also tapping the daily fair value gap. We were expecting a reversal, but it went to continuation. It's all fine. You can see there is an accumulation here, then it went down. All right, so 1 hour we're gonna extend our fair value gaps. We're this purple line here. That's where our London session starts. So we will ignore all this, the market fall. We're gonna ignore these because like we don't know what's gonna happen when we are like trading, right? So we're just gonna like extend these and then go to 15 minutes. All right, so we're in 15 minutes and we're gonna mark the daily open, which is at 00 or 12 a.m. Oh wait, it's set at okay, so it's at 00 right there, and that's our daily open. We want the smart money to buy. We want the smart money to short above the daily open so that like it can rally below to the previous day low, which is our main drawn liquidity, right? All right, so in 15 minutes we got our daily open right there, and we can also see that there is 2 equal highs, and there was this old equal highs which were taken down. You can see there are more 2 equal highs. Okay, so in the lower time frames you can see that I have marked these, but like in 15 minutes I'm just like observing, so we're expecting like there will be a liquidity sweep there so that it rallies below. Okay, so we're gonna now drop that to 1 minute, and let's go back to the London session. All right, that's our London session. So I was mentioning about the 2 equal highs, which were right there. It got swept and then made more 2 equal highs there, and this is our base. Basically it's Asia's high. Okay, this is Asia's high because you can see the time is you can see here below, the time is 21:59, and the Asian session is from 20 to basically midnight, right? So like 4 hours of it. Sorry, I'm having my nose blocked, so like I'm not able to speak properly, but yeah, so that's Asia's high and that is Asia's low. We are expecting that there will be a liquidity sweep of Asia's high and a market shift structure would happen right there. So we see a liquidity being swept here. You can see this high is taken down and it rallied down. This short-term low has been taken. There's a market shift structure. There is a fair value gap here, and we can see how the price is respecting the consequent endorsement and rallies down, again going up to the consequent endorsement, going down and hits our minor sell side liquidity over here. Our main drawn liquidity is this one though, like sell side liquidity over here, which is the Asia's low and also the previous day low, which is right here. This is the blue line. I just put this here. All right, so we can see that price went down here to the minor sell side liquidity, and from here the London session starts. So in London session when the London session starts, smart money wants to buy above the equilibrium. So we can see there is a low here. It rallied up. It made another low up and another low there. Then it's just going up and up. So that's our intermediate low, right? So should I mark this low point over there? And of course our highest point is there. When this London session starts, smart money wants to buy, sorry, it's bearish. So smart money wants to short, or basically smart money wants to sell at premium. Okay, so let me just put this premium discount fib here, and we can see that the 0.5 is the equilibrium, and we're expecting the price to go above equilibrium and to the premium so that the smart money can do the smart money can short there. So now we're gonna open our fib, and from the high to the low we're gonna mark it out, and we're gonna see how the price is going to the range of 0.62, 0.705 and 0.79. So let me just mark this as a yellow box here. Okay, this one. Oops, gonna mark this like that. So that's our OTE level, and you can see the OTE level is overlapped with this fair value gap. Okay, so we can see how the price went up to the OTE level, and yeah, and it is going down. So what are the confluences? The first one is a market shift structure. That's the fair value gap. Okay, it's not fully filled just till the consequent enrichment went down. The London session starts. We see a intermediate short low, and we see it's retracing back. So till when it's gonna retrace? It's gonna retrace till the optimum trading entry levels. We're gonna mark that area, and there is a fair value gap. So we're gonna buy. We're gonna short at the first quadrant from below. Where will be our stop loss? Our stop loss will be set at, you see this candle, right? So 1 pip above it, because like we're shorting, so that's the candle, the candle's high. 1 pip, so it's 1.5 here. Yeah, so we'll put like 1 pip above, so it's gonna be about there. That's like exactly 1 pip above. And for our exit, we can take partials here, because we can take a partial at this low, because that becomes a minor sell side liquidity, and we can take another partials there, because that's our Asia's low, and we can take the rest full like trade exit at the previous day low right there. Or if you don't want any risk, you can just scroll back and look any lows here. We can see that there is an old low here. This low was made on Monday, and it's also a sell side liquidity, so you can just aim for there. Okay, but for now we're gonna just aim for the Asia's low. But your overall drawn liquidity was previous day low, so you can definitely aim for that. Okay, all right, so that was our London session. Basically, I'll explain you how this trade is being done, like in a more detailed way. So it went to the OTE level. We took a short at this first quadrant from below. Again, I'm just gonna delete this OTE level for now. We can see the price is above the daily open, which means that the smart money wants to short at this range, and there is a fair value gap here also. Now we see that while we were in this spot, we wanted the price to close below this. It did. The next was below this, and it definitely did. While going down, it made a fair value gap. So it came down, and it consolidated for some time. Now it did a bit of consolidation to basically gather liquidity on both sides, take the sellers here, and then take the buyers at this spot while it going down. Oops, just deleted that. Oh, I'm having some TradingView is giving me some network problems, it seems. Some sort of glitch, I guess. I don't know. Anyway, so I did some consolidation here in this range. Okay, and then we can see how the price went up to this open fair value gap. Keep in mind that before it going up, before the price went up, this was an open fair value gap, but when it tapped the lower half, the lower part of this whole framework, it became an institution order flow entry drill, which means that it's going to be a heavily bearish for the smart money. Like they're doing it like in a very heavily bearish way, and we can see how the market fall to this minor sell side liquidity. Then it came down to this old lows, which was right. It's the Asia's low, and then it came down to the old lows. And at this point, you can just close like 80% of your trade and just put like 20% of your trade as a runner till the previous day low. So yeah, that's how we took the trade here. Yeah, that there, and then 2.5. Boom. Asia's low target. Yeah, it's a 4.81 RR. It's pretty good, and we can see there is a continuation in New York right there. New York starts at 7, which is there. It rallies up to the fair value gaps here. There's a 1 minute fair value gap, which is nested which is nested on a 15 minutes fair value gap. There is this 5 minutes order block right there. I'll show you right now. Okay, so boom, boom. What is that? Okay, it's a bearish order block, and the opening price of it, that's the most sensitive part. So yeah, we can see how it's reacting there, right there, just tapping the opening price of the order block. This is also a change in state of delivery, CISD, and yeah, it came down. Also, there's the fair value gap here. So it's all these are 1 minute. I'll go back to 1 minute. Okay. Look how the price is like acting upon the fair value gaps. Here it's respecting the consequent endorsement of this one, going up to the order block, one more bearish order block right there. Then finally hitting this minor sell side liquidity over here. Also, it's entering the daily fair value gap, if I'm not wrong. Let me see. Yeah, it's the daily fair value gap which is being entered. So yeah, that's how pretty much it. The price was on 30 of on 1st October, which was Tuesday, and yeah, we did the London session trade today. We did not go for New York. We just did the London, and we were pretty happy with this. So yeah, thank you for watching, and we will meet on the next video.